Hello there, this is forexbrokers.net, and we continue our triple combination analysis. In the first video, I've presented the theoretical part, what makes triple combination, and this time we will look at a possible triple combination on the Euro US dollar on the monthly chart. So this has huge implications moving forward for any trader. Elliott waves, as this trading academy mentioned many times, works best on the bigger time frames, and rarely we should go on the lower time frames like the hourly chart and so on, because the market moves too fast. Of course that the implications on the monthly chart require more resources, more patience for patterns to form, but it is a good practice or a good example to practice, and a good time frame to practice, and to check a bit what the market does and what are the conditions, if the market respected all the conditions, and so on and so forth. Triple combinations form really rare. So by the time that you end up finding one, either as the entire leg of a contracting triangle, or as part of a fifth wave extension classic impulsive wave, or part of a terminal impulsive wave, then usually you will end up seeing the pattern after the fact. But on the bigger time frames, there's always the chance of trading something and watching it, how it forms. Now, Euro US dollar topped before 2009. In 2008, during the great financial crisis, made a double top here at 1.60, and then what followed is this pattern here. This cannot be an impulsive wave. Remember, the first question to answer, part of any logical process when dealing with the Elliott wave theory, is if a market move or market segment or market advance or decline is impulsive or corrective. Because if you are able to answer this question, then all of a sudden half of the analysis is left behind. For an impulsive wave, we need an extension, one wave to extend. There is no extension here, and therefore the move from 1.60, let's say, to the lows cannot be impulsive. It can only be corrective. Then the next thing to ask yourself as an Elliott waves trader is, all right, this is a corrective wave. What kind of a corrective wave? And you start with the basic corrective waves that we know from the academy: zigzag, flat, or triangle. No corrective pattern or complex one starts with a triangle. So if you are to see a triangular pattern, it means that if the market here forms a triangle, it means that it goes A, B, C, D, E, and then you draw the so-called B2D trend line, and it is supposed to break the B2D trend line to the upside and move to the upside. But the market didn't do that. Instead, it turned and made a new low. So triangle is out of the question. Then we turn to the next possible options. If we say that this is not an impulsive move, it's not a triangle, then it can only be either a zigzag or a flat. So for a zigzag, we look at the first swing low, which is wave A, and then the next swing to the upside, we see that it exceeds, or it goes beyond 61.8 of wave A. We know that if you take a Fibonacci retracement and measure this segment, you see that this is way beyond 61.8. It is visible just by looking at the Euro US dollar here. Therefore, we leave the zigzag scenario behind and we focus on the flat. We know that the market here formed a flat A, B, C. Once again, from the top, we discarded the impulsive wave, the zigzag, the triangle scenarios, so we only left with the flat. These are the only choices when you start analyzing a corrective wave. Many people fear that the Elliott waves is too complicated and it's impossible to know everything. Well, if you use such a logical step, it's impossible to get lost, as a matter of fact. So it starts with the flat. And then if this is supposed to be an independent structure, a simple pattern, all we gotta do is to measure the time that it took for the C wave to form, which was 7 candlesticks, project that time on the right side, and in the next 7 candlesticks the market should fully reverse the C wave. It did try, but it failed to fully reverse, and then the time expired, or the price exceeded those 7 candlesticks. And the logic is that the market doesn't form a standalone independent pattern here for the ABC. Instead, it formed a complex correction. An X wave is in cards. All we gotta do now is to measure, to take a Fibonacci, and to find out, to measure the entire length of this ABC, and to find out the 61.8 level. In order for the market to form a triple combination, the X wave should not end, attention here, end beyond 61.8. If you consider this one the end of the X wave, so you gotta go dirty and go down on the lower time frames to see what kind of a pattern is this one. If it ends here, then this is no triple combination, because this is a complex correction with a large X wave. A triple combination is a complex correction with a small X wave. If you go on the lower time frames, you will see that the market here forms a triangle, and the actual end of the pattern is right here on this small green candlestick, which is beyond 61.8, which is all we needed to know for a small X wave moving forward. The market then goes with A, B, and it collapses lower in a classic impulsive move. 1, 2, 3, 4, 5, A, B, C. At this point in time, we see that the market formed what? It formed one flat, an X wave, another flat. Already we start suspecting a triple combination. Why? Double flats, as mentioned in the article, double flats as patterns are very rare, not to mention triple flats. And therefore the chances are that the market will form just another swing higher that would not exceed 61.8 of the previous ABC, and then it will start forming a triangle. Well, we do have the swing higher here. This is the 2016 US presidential elections. This move high on the euro was caused by President Macron in France election. The market went 1.25 before reversing to almost parity, back to 1.06. So based on what we said so far, we are, based on this triple combination, we are with the market somewhere finishing the X wave right here. This is the X wave, this is the X wave, and then this move lower should be only wave A. Now the question here is this wave A over or not? That's a different question. What we do know at this point in time is that the market might form a triple combination, and any triple combination ends with a triangle. Hence, there is a bias for the market moving forward. Thank you for being here. Let's wrap up with the next video what we still have to say about triple combinations. Bye bye.